15 minutes into the hour, you're still watching Global Business Africa from the Kenyan capital, Nairobi. Now then, let's move on to commodity prices in this particular segment. Let's start with oil prices. They plunged by 4% on Wednesday due to stronger than expected U.S. crude oil stocks and weaker manufacturing data. Now, the ease comes after Tuesday's deep falls as well. Concerns about global demand for petroleum weighed on market sentiment. Higher U.S. stocks also did contribute to the fall as well. Analysts say spiking supply and speculation around supply and demand are dragging oil prices much lower, and this extreme volatility can continue if there are similar wild swings in equity markets in the days to come. Let's get the latest developments now in the oil market around the world with Shatia Brantley. She joins us now live from New York. Shatia, let's go back, however, to Monday. To what extent was that early week rally driven just by a change in market sentiment as opposed to the actual global oil demand supply balance?
Exactly. So as you mentioned, oil had its biggest three-day surge in 25 years on Monday. It rose by $10 a barrel over the course of 3 days. Now, some oil analysts had been expecting oil prices to rebound after slumping in late June, but the crazy moves we've seen over the past week are probably more of an overreaction to headlines. And the headline in particular is from an op-ed from the OPEC bulletin, which said that downward pressure on prices due to higher production remained a cause for concern, and that OPEC stood ready and stands ready to talk to other producers. But as you mentioned, we have an oversupply. We got the data today out of the Energy Information Administration that showed U.S. stockpiles rose last week. This adds to concerns about global oversupply and, of course, weak data, weak economic growth in China. For example, inventory rose by 4.7 million barrels. One analyst we spoke to said a 4+ million barrel build is considered bearish and higher than normal. And also, too, we had the news today that President Obama secured the votes he needs to sustain a veto of any congressional action blocking the Iran nuclear deal. So that has added pressure, because if the sanctions are lifted for Iran, that could add even more oil supply to the market.
Of course, essentially with Iran coming back in a matter of years. But this isn't the first time we've heard OPEC as a bloc say it's, quote, ready to talk. I mean, what was different, if anything at all, this time round? Or did the market just read a bit too much into that one statement from the cartel?
Yes, quite a few oil insiders say the market indeed may be overreacting to the headlines. In fact, one trader I spoke to said the market is absolutely reading too much into this statement. Analysts and OPEC insiders said it seems clear there is no sign of any significant shift in OPEC policy or any indication of a fresh push to shore up the oil markets right now.
Indeed, we'll leave it there for the time being. Thanks for the update. That's Shatia Brantley live in New York.